Your write-offs might be triggering audits, and if you're running a six-figure photography studio owner, the IRS is watching closer than you think. Stay with me because what I'm about to share with you could save you a very expensive mistake. And I get it. You've worked incredibly hard to build your studio to six figures and beyond. You've invested in top-tier gear, you've built an amazing space, and maybe hired a team, and you're finally seeing real profit. But here's what nobody tells you when you hit this income level. You just moved into a completely different tax bracket, and more importantly, a completely different audit risk category. If you're new here, my name is Travis Reynolds. I am a CPA and I help photography studio owners run more profitable studios. Now, the tax strategies that worked when you were making $50,000 or $60,000, they don't fly anymore. And that Facebook group advice about writing off everything, that, my friend, is a one-way ticket to Audit City. So here's the first mistake I see all the time. Studio owners writing off personal equipment as business expenses without the proper documentation. You bought a new camera and you use it for your client work, so it's a write-off, right? Well, yes and no. If you're also using that camera for personal use, such as family photos or your vacation to Hawaii, you can only deduct the business portion and you have to document all of it. So if it's like 70% to 30% of a business to personal ratio, you can only deduct 70% of that camera. And a rough guess doesn't cut it when you're making six figures. You need to document it. The IRS want to see that you've been treating your studio like a serious business. Now let's talk about the big one that gets photography studio owners in trouble, the home office deduction. If you have a dedicated studio space in your home, yes, you can deduct it, but the key word here is it has to be a dedicated space. That spare bedroom where you edit photos but also store your kids' toys and occasionally have guests to sleep over, that's not going to fly. The IRS wants exclusive and regular use for business. And at your income level, they're much more likely to scrutinize this. Here's what's even more interesting. A lot of six-figure studio owners I talk to are still taking the home office deduction when they'd actually be better off renting a separate studio space. This is because they would get to write off the entire rent. So why should you do this? Because it's cleaner, it's more defensible, and it often creates a better tax advantage anyway. And let's be honest here, when you're making six figures, having a professional space separates you from your competitors. Now let's address the elephant in the room, and that is meals and entertainment. I cannot tell you how many studio owners I've seen write off every single meal as a business expense. For example, they had coffee alone at Starbucks while answering emails. Well, they would write that off as a business expense. They would grab lunch between photo shoots. They would also take that as a business expense. Dinner with your spouse where you might have mentioned work once, they would also expense that as a business expense. So let's stop that. The IRS has very specific rules about meals and they've gotten even stricter. You can generally deduct 50% of meals, but they need to be directly related to your business. That means meals that you have with potential clients, your team where you actually are discussing business, and you need to document it. On the receipt, you need to write who you met with, what was discussed, and what was the purpose. At six figures, vague credit card statements won't cut it anymore. So here's a reality check. If an auditor looked at your meals deductions, could you explain every single one with a straight face? If the answer is no, you need to clean up your act. Now let's talk about travel. This is where things get very interesting for photography studio owners. Your travel destination weddings, on-location shoots, and workshops, conferences, these can absolutely be legitimate business expenses, but here's where people get tripped up. That week-long trip to Italy where you did a 2-hour photo shoot, and then you spent the rest of the time sightseeing, you can't write off the entire trip. And the IRS has very clear rules about this. Your trip needs to be primarily for business. That generally means more than half of your days need to be for business and personal days don't count. So if you're doing a destination wedding and tacking on a vacation, you need to be careful of how you allocate these expenses. The flight might be partially deductible, the hotel nights during the wedding are business expenses, but those 3 extra days exploring, those are personal expenses and cannot be deducted. And here's something that most people don't know. When you're at a six-figure income level, the IRS expects more sophisticated record keeping. We're not talking about a shoebox full of receipts anymore. You should have a robust accounting system in place. We're talking things like separate business accounts, clear documentation for every deduction, and having accounting software to keep track of all of this for you. And why is this? And that is because the burden of the proof is on you. If you get audited, you need to prove every deduction is legitimate and properly documented. Speaking of documentation, let's talk about that expensive new camera system you just bought. Can you write it off? Probably yes, but should you write off the entire thing in 1 year using bonus depreciation? Maybe not, and this is where strategy comes in. At your income level, you might be better off depreciating that equipment over time, especially if you're trying to manage your tax liabilities across multiple years. This is kind of a nuanced decision that requires actual tax planning and not just Facebook group advice. Now here's something that might surprise you. Sometimes the best tax strategy is actually paying more taxes in the short term. Now hear me out about this. If you're writing off every possible thing to get your taxable income as low as possible, you're hurting yourself in other ways. You want to get a mortgage for a new house? Lenders want to see income. Trying to get a business loan to expand your studio? Banks want to see profit. Making your business look unprofitable to avoid taxes might save you money now, but it could cost you opportunities later. At six figures, you should be working with a CPA who specializes in small businesses, preferably somebody who understands creative businesses. I'm not talking about someone who just files your taxes once a year. I'm talking about a strategic partnership who helps you plan throughout the year. Someone who understands your business model and who can guide you on what's legitimate and what's aggressive. Because here's the thing about aggressive tax strategies. They might work until they don't, and when they don't work, the penalties can be severe. We're talking back taxes plus interest plus penalties, which is often 25% of what you owe. On a six-figure income, that's not pocket change. That's potentially business-destroying money. So what should you actually be doing? First, get serious about your bookkeeping. Use proper accounting software, categorize everything correctly, and keep detailed records. Second, you want to separate your personal and business expenses completely. Have a business bank account and a business credit card. Use them exclusively for business. And then third, you want to document everything. Take notes about business meetings, keep your mileage logs, save receipts with notes about what they were for. And then fourth, and this is crucial, let's be honest about what's actually a business expense. If you're using something partially for personal use, only deduct the business portion. The peace of mind of knowing your deductions are legitimate is worth more than saving a few $100 on your taxes every year. And finally, invest in good tax advice. A good CPA will save you more money in legitimate tax strategies than you'll ever save by pushing the envelope on questionable deductions. They'll help you structure your business properly, take advantage of retirement accounts, time your income and expenses strategically, and keep you out of audit territory. So if you found this video helpful, do me a favor and hit that like button. It really does help in the algorithm show these videos to other studio owners. And don't forget to subscribe if you want more business advice for your photography studio. And drop a comment below and let me know what your biggest tax question is as a studio owner. I read every comment and might make a video answering your question. Remember, your goal isn't to pay zero taxes. Your goal is to pay exactly what you legally owe. Not a penny more, not a penny less, and to do it in a way that's completely defensible if the IRS ever comes knocking. Because trust me, at six figures, the risk isn't worth the reward. Build your business on a solid foundation, play by the rules, and you'll sleep a lot better at night. So thanks for stopping by, and I'll see you in the next video.